electric vehicle stocks are a pretty controversial topic in my Discord. Link in the description. And Lucid Group is one of the more well-known companies in that space. They're known for being the more luxury brand of electric vehicle, slightly higher price points. And, I'm going to acknowledge here that these are pretty slick looking cars. All right. Definitely, if I had, 82K to spend on a car, I would definitely consider, owning one of these in my garage if I had a garage. But it's important to separate a product from a business, okay? Just because a business happens to make a nice, shiny product doesn't necessarily mean that it's a good investment at today's price. Now, one of the big line items I keep seeing in different articles is that they're joining this Tesla price war. Now, Tesla is, of course, in the electric vehicle space, the big mama jama, all right? And Tesla's got pretty beefy gross margins for a car company, routinely exceeding 20%, okay? That's a bit better than other standard car companies out there. Now, when it comes to Lucid Group, and, of course, you see this revenue growth, and it excites you, right? It seems like they're just going up by leaps and bounds. But then you scroll down a little bit further, okay, and you see that their gross margins are deeply negative, okay? Now, I don't have this quarter's numbers yet, but as of the last quarter, it looks like the gross margins, according to this data feed, were negative 234.95%. That means that for basically every dollar of revenue that they brought in, they were actually spending $3, basically losing you an extra $2+, $2.35, essentially. Okay? Now, for a company with a gross margin starting that badly to then go into a price war with Tesla means they're going to have to basically burn money to keep growing revenue at an even greater pace, potentially, because that gross margin you would expect, if they were to drop the price, would get even worse, because that's what they basically make on every single car. That's like their cost versus how much money they bring in on each individual car, before factoring in for like general overhead type expenses. And the basic idea and why you get excited for revenue growth in a company like Tesla is that with gross margins of 20 to 25%, it means that every time they grow this revenue by $1, another 20 to 25 cents goes into gross profit, which then gets used to pay the general expenses, overhead, and that kind of thing, which translates into an increase on the bottom line if they are already profitable beyond those expenses. Whereas with Lucid Group, the only tool in their tool belt they've really got to keep enough cash to do this, to keep growing sales while reducing prices, I would imagine would be resuming the massive rate of share dilution. Okay? Now, they could also take on debt, but if you think about it, the debt can only be serviced up to a point if their gross margins are negative. I mean, they're going to basically have to issue shares to pay the interest on the debt if they take out debt. So either way, it seems like they're going to be diluting shareholders. And, with interest rates in a sort of elevated environment compared to where they used to be over a few years ago, my bet is that it's going to be dilution. That's going to be the path that they take, which unfortunately makes me wonder, will they ever get to a point where they can reward their shareholders on a per share basis with anything, that makes today's share price worth it? And I mean, I think the market over the last year has sort of spoken and said, hey, we need to see how exactly this company is going to make a profit. And I think the best way they could start to do that is by getting those gross margins up, closer to at least break even. Which, if they're cutting prices, that's not what they're doing. So if you're an owner of this stock or you're considering getting into this stock, the thing I would watch out for is what on earth they're saying about their gross margins. Because if there's one thing I can tell you, it's that Tesla has both the war chest, right, and the gross margins to get into a price war. LUCID does not, okay? So, approach with caution. I'm not saying anything negative about the product, but again, you have to separate the product from the business. And this business right now is on pretty shaky grounds going into today's earnings. Let me know down below, though, if you own any shares of LUCID, what price you got in at, and what you think the path to profitability is. It could be that, maybe they have, a solid plan to get those margins up and actually become profitable. But it looks to me, just on the basis of the numbers, like a very uphill climb. So let me know down below. Like and subscribe and join the Discord, link in the description. Also, hit that join button. I only charge 99 cents a month for my basic channel membership, and you all get a little bit of extra attention from Poppy. That's me, yours truly. Take it easy, everyone, and have a fabulous Monday. Good week ahead.